Should you hold stocks or should you hold bonds in your RRSP account? What kind of investment income should you have in your RRSP account? Interest, dividends, capital gains? What's the best? What about foreign investments which generate dividends? What about those? In this video, I'm going to explain to you what kind of assets to have in your RRSP account so that you can optimize your financial situation and your tax situation. So stay tuned. Hi, I'm Julien, Regoli, CPA, CMA, finance coach. My purpose is to help people with their finances so that they can reach financial freedom more rapidly. I teach people how to think about money, how to save money, and how to invest money. If this is the kind of topic you like and you're interested in, just sign up to my channel and hit the bell button. You'll be notified whenever I upload new videos. So what kind of investments should you hold in your RRSP account? Well, first of all, did you know that you get taxed whenever you take money out of your RRSP? Usually that's at retirement. The money you take out is taxed. This is important because if you compare with a TFSA, that's not the case. So what's interesting is that even dividends and capital gains that you make in your RRSP account, well, they're not taxed when you make them, but when you withdraw from the RRSP, you're taxed at the full rate. There's a way to optimize your situation so that you don't pay more taxes than you need to by being smart about which kind of investment goes in which account. I have a video on RRSPs, more details on that, so take a look at that. Let's use a simple example, okay? So say you have $10,000 and you decide to buy this stock, Tesla or whatever, another stock, high growth stock, and you made $100,000 on it. If you invested in a TFSA, that $100,000 capital gain, you're not going to pay taxes on it because it's protected when it's in the TFSA. Now, you don't get a tax break when you put money in the TFSA. You don't pay any taxes when you take money out. Say this investment is in your RRSP account. You're not going to pay taxes the year you made that capital gain, but the catch is that you are going to pay taxes when you take money out of the RRSP. And when you take money out of the RRSP, there's no distinction on how you made that money. There's no distinction between dividend or capital gains or interest or whether that's your original contribution. The program doesn't care. Money out is taxed at the full rate. So say you're retired, you're starting to take money out, and you're in a 30% tax bracket. That money that you can take out, and you take $100,000, let's say it's the $100,000 you made on that Tesla stock, you're going to pay 30% tax on it. So it's 100,000 times 30%, that's $30,000. Here's the point. What you want to do is you want to be careful. Maybe have those higher growth investments in another type of account like the TFSA and have the less volatile, more conservative type of investments in your RRSP. Just because when it comes to withdrawals, the RRSP will be taxing you. And you want those high growth investments in your TFSA instead of your RRSP so that you pay less taxes. So again, what you want to be doing is you want to consider putting the more conservative, less volatile, less risky investments in your RRSP and the more volatile, more risky, higher return kind of investments in your TFSA. Now, if you're following the lazy portfolio strategy, this is a strategy that I discussed in a previous video, so take a look at that. This strategy is very simple. All it says is you put your age in bond ETFs and the balance in stock ETFs. So say you're age 30% of your portfolio goes in bond ETFs and 70% goes in stocks or equity ETFs. And you adjust every year as you get older. So the point is the older you get, the less volatile your portfolio becomes. And that's a guideline again. It means that if you have less tolerance for risk, buy more bond ETFs. If you have a higher tolerance for risk, you buy more stock ETFs. You adjust according to your personality and what your risk and volatility tolerance level You got to respect the asset allocation from the perspective of the total portfolio and not from the perspective of individual accounts. This is pretty important, guys. Now, if you want more detail on the difference between TFSA and RSPs and how you should choose between TFSA and RSPs, I have a video on that. Take a look at it. Another point you want to consider is foreign investments that generate dividends. Exceptionally, the RRSP is the only type of registered account that shelters you from the 15% withholding tax. So if you're going to hold some conservative dividend generating foreign investments, that should be in your RRSP. If you have any questions or comments, use the area below the video to drop me a note there. Also, if there are any other topics you'd like me to cover on personal finance, let me know, drop me a note, and I'll look into it. If you like this video, hit the like button. If you think this video could be beneficial for a friend, a family member, an acquaintance, share it with them. And subscribe to my channel because I have more videos coming on different topics around saving money, investing money, and thinking about money. Thank you for your time today, folks, and I'll see you real soon.